Alright, what is going on, everybody on YouTube? Griffin here, coming back to you guys with another live stream from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, if you're tuning in for the first time, before we get going, definitely consider hitting that subscribe button below. Hit the bell icon right beside it. If you're new to the channel and whatnot and just looking to join an awesome community of like-minded people, and while you're at it, go ahead and check out our Discord group chat. That's down in the description below. Of course, I don't charge for like anything to join any groups or anything like that. Just all about getting a whole bunch of people essentially together. I had a total brain fart there for a second. Just getting a bunch of us like-minded people together, just looking to make money in the market by any means necessary. We now have like close to 200 people in there. Last I checked, about like 170 to 180. So it's awesome to see that continue to grow, and we just hit today 1,000 subscribers. So awesome. I can't believe that we finally got there. I've been doing this YouTube thing for a while, and it's just awesome to see this community just continue to grow every day, week by week. So we'd love to have you here for that. But with that, we will go ahead and hop right in. I just want to make sure before we get going that our stream is up and doing all right, and it looks like we are okay. So we'll just start out real quickly just with the broader markets, because I know it's been a few days since we've gone live or anything, since Sunday actually, I believe. And so far, as expected, pretty sideways. We had a pretty nice start to the week, and then ever since we've been kind of sideways. But with that, we'll just stick to the topic at hand, which is just kind of how I go about getting into options trades, leveraged ETFs, and so on. Like, just what goes into my mindset, like my thought process essentially whenever I am making a trade. You guys know that I trade the leveraged ETFs very, very often, especially as of late. I would say the last month or so now, month and a half, we've really been trading pretty much, for the most part, I'd say 80 to 90% leveraged ETFs, and then the rest of it being options. I won't be talking about both of those today, just the strategies that I use, what's helped me since we open this up for you guys, since we have started trading on TD Ameritrade Thinkorswim. I believe it's now like 8 weeks ago today. It was a Thursday whenever all of our money was transferred from TC Works to TD Ameritrade, where we started out with $1,500 in the portfolio. As you can see, we're pretty much right at 2,000. My goal for the week was to break 2,000. If the market goes as I'm expecting tomorrow, we should definitely bust right through 2,000. As you can see, we're only a couple bucks from that as we speak. We're actually above it briefly today, and then we came back down, mostly because I was starting to place a couple of positions that we'll be discussing, because like I said, I'm going to explain to you guys kind of what the thought process is when it comes to placing these options trades. And then of course, all, as you can see here, all leverage ETFs. Pretty much we've played just about every single one outside of UDAO. We have not taken a position in UDAO lately, but we sold all of the SDAO. We did sell all SQQQQ, and now we are in just a couple shares of TQQQQ. I feel like I'm saying too many Qs. And then about 10 shares of SPXL, both of which you can see we are up already. Nice to see that, of course. But just kept it small because we already have a bullish position with QQQ. We have a short put spread, which for those of you that are newer to trading options, which I know a lot of you guys tuning in are, when you're doing a short put vertical spread, you're going to be collecting a credit whenever you place this trade, and it'll show you, I take screenshots actually in our Discord group chat and show you guys like the trade setups and whatnot, and it'll show you up front, like, this is how much your commission is going to be, this is your max loss, this is your max profit. So it's defined risk, which is what I like a lot. And this trade, if I recall, the trade off, like the max risk was essentially, or not max risk, the max profit essentially was somewhere around 30%, 30 to 40%. And again, when it comes to the max profit, we're not necessarily looking to get max profit when it comes to these vertical spreads. Honestly, if we can get between 10 to 25% in the first day or two, we usually go ahead and just take the profit and run, because you're usually looking at somewhere around a minimum of 4 to 10% profit right out of the gate. We had a SPY, two of them recently. This one was a very small profit, but the one before, again, you guys in Discord seen that trade. That trade was about 20% profit. So what exactly goes into just my thought process when it comes to placing these trades? Well, when we go and just take a look at TQ, we'll just start out with the leverage ETFs, and then we'll hop on over to the options here in just a minute. But when we take a look, just hit TQQQQ, since that is what I went a little bit heavy in, as well as SPXL. The charts are going to look somewhat similar, as the broader markets tend to not to a T follow each other, but when they all go up, they all tend to go up. When they all go down, they tend to go down more times than not. So we'll just look at TQQQ primarily. We'll look at SPXL here in a second, just briefly. But I always start out, you guys know, I start out with the 1 hour chart first and foremost, because I like to get a look at the medium term, just kind of, especially when we've been in such a volatile market. I kind of want to see, okay, how have we been moving on our 1 hour chart, especially from an RSI, MACD, as well as our DMI indicator standpoint. And then I kind of like to zoom in a little on the last week or so. And as you can see here on our 1 hour chart, we've been riding right along that lower Bollinger Band. And again, I have my Bollinger Band set at 2.5 and minus 2.5, because the success rate on those is somewhere around like 80 or 90%, something pretty successful. And then as you can see here on our MACD, when we zoom in a little bit closer, we now have a buy signal, which was not there actually when I placed the trade. I always tend to place my trade just before the signal is there, and which sometimes it can bite you in the butt. So that's where, again, you look at your RSI. You don't rely on just one indicator. I cannot stress that enough. I did not buy first thing this morning when we saw this potential cross here, because I was like, our MACD is still sitting around 60. We're just now starting to cool off. I was like, let's see what happens. Obviously, throughout the day, we continued to sell off. TQQQ was down over 3% on the day. And then when I looked, I was like, okay, you know what? Our RSI has cooled off quite a bit. Last time we were down at these levels, we ran for a few days in a row. Is that necessarily going to happen this time? Probably not, but with Memorial Day weekend and everything coming up, I was like, you know what? I would not be surprised one bit. As low as much as our indicators in the short term have cooled off, I would not be surprised if they run it up going into the extended weekend. So I take a lot into account, but again, first and foremost, I love to look at the 1 hour chart just for kind of I call it like a medium to short term perspective, because the 1 hour chart, it's only a 20-day chart. So, I mean, obviously you can see here, this came from $60 all the way to 81, which is a really good, about 30% jump over the last 20 trading sessions. Again, 20 days does not mean literally 20 days. This goes all the way back to April 23rd. So pretty much your 20-day chart is roughly going to be a 1 month chart, essentially, because obviously there's usually 5 trading days per week most of the time. So you just multiply that by 4 weeks. That's why it's roughly a month, a 1 month chart. That's, again, just where I like to start. I like to see where we're kind of at, what the trend is. And another thing I was looking at with the TQQQ trade was, you can see here, zoom in, this was our previous resistant point, somewhere right around $78, and where do we coincidentally just happen to bounce right off of? And now we are well above it in after hours trading, right around that $78 level. And I actually got in at 78.34, I believe, if we go back and look at the monitor. 78.34 is where we got in our 5 shares. Again, I took a pretty small position overall. I mean, 5 times 78 is what, like $350 to $400, somewhere around $400 position. But again, I always like to keep positions small, especially when I open them. And then if they go up way more than I expected, then I'll go ahead and hold them. And whenever we do have a drop, then I'll go ahead and take advantage of that drop and add more shares, kind of do a dollar cost average, ride it up a little bit more, and then go ahead and sell the position. But I do like to always start pretty small in any position I do. especially when the market's kind of how it is right now, where again, look at that 20-day chart. We haven't, even though we've moved pretty far, I would say ever since probably the first, second week of May, we haven't made a whole lot of progress. We've been trading in a pretty tight range from a TQQQ side of things, between around $68 to a high of obviously right around 80 to 82 bucks at the recent high, but pretty much right around 80 bucks is where this thing has gotten smacked down. And again, what was really bullish for me was again, this was our previous resistance. It acted as a pretty solid support, even though there was obviously a little bit of selling pressure today. And now you can see in after hours, we've obviously bounced pretty good off of that. And now we've even got a couple buy signals. I would like to see this DMI go ahead and cross. The green is obviously quote-unquote buy, red would be selling pressure, which is why you saw that cross earlier this morning. I think if we can get that to cross as well, I think we go off to the races. My target sell, if this thing can continue to go up overnight, my target sell, honestly, I'm not looking for a lot. I'm looking for 82 bucks. So that'd be what, a about a $3.70 roughly per share. So $15 to $20 on that trade. And then again, like I said, we were going to look at SPXL since we also took a position in there. Again, almost the same concept. Chart's not 100% the same, but generally speaking, it's fairly close. This is traded much more in a tight range than TQQQ. Because like we were talking about in previous streams, you can expect technology to outperform the S&P and the Dow, just because S&P and Dow have a lot of companies that are going to struggle. Even as we continue to open the economy back up, they're going to struggle for some time. But even they have done pretty well recently. We have a new recent high. And again, you can see the same type of concept here. Previous resistance was right around $36, $37. We bounced right around that area today. It's up to over $37 in after hours. So again, we got in there just below 37. We'd like to see that bounce right around 36 or where was it again that it bounced? Yeah, bounced above $36. Like that is a bullish sign. It is trading in a pretty tight range. Honestly, my target profit for this, kind of a tighter chain. If I can get $38 tomorrow, I will probably go ahead and sell this. 38 to 39. I'd like to get 39 out of it, but if I can get 38 and I start to see resistance, I'll go ahead and sell it. It won't be much. It'll be like $10 to $15 of profit. But again, we don't think about our profits in terms of dollars. We think about it in terms of percentages. So when we go and look at, and that is the biggest thing with like my mindset, and I want all of you guys to adopt that same mindset, because when you start thinking of your profits in terms of percentages instead of dollars, then the dollars will start to just slowly roll in. I mean, at first I was only having like $5 profit days, $2 profit days, $10 profit days. Now I'm to the point where day by day I'll still have a couple losing days, but now I'm to the point where I'm starting to see like $50 days, $30 days, $70 days occasionally here and there. Like the money starts to roll up because you just have that compound effect, where as your account continues to grow, your position size is slowly going to get a little bit bigger each time, and then of course the money will follow. You just got to trust the process and continue to think in terms of percentages. So like the SPXL, I'm in at $36.96. So like I said, if I can get it at $38, I will go ahead and sell, which is $1.04 per share profit divided by 36.96, which I'm kind of disappointed in how high I got in that, but had to do what I could after hours. I had a late day at work. So that's almost a 3% profit, which on a actual stock position is pretty good. In all honesty, like I said, if you can average just 0.5% to 1% on every single trade and every single day, every single week, your account's just going to mathematically explode over 1 year. Just 1 year. Just watch your account explode doing trades like that. And the TQQQ trade, what was my target? I forget. I say 82, I think. Go back here real quick. I don't want to misspeak. Yeah, I'm looking for, I don't remember now. Did I say 82? I'll just call it 81.50. Split the difference because I was debating between 81 and 82. So we go back over here. Again, we're in at 78.34. So we said 81.50. That is a $2.16 profit per share. So 2.16. I should have bought some more, but it's okay. $2.16 profit divided by 78.34 is going to be, again, about the same, about a 2.8% profit, just under 3%. And then if you just have to, because you're that type of trader where you want to see the actual dollar amount, you're talking 216. Again, I do not like to think of it in terms of dollars. The dollars will continue to come over time, but that's 1080. Then we have 10 shares of SPXL, and our target profit is 104 minimum. 104. That's another 1040. So we're looking at potentially a $20 plus day tomorrow on those trades if I can get my target profit tomorrow. That is. So yeah, that's what goes into the actual leveraged ETFs. And what I love about those leveraged ETFs is day to day, a lot of times, almost every single day, you're going to see somewhere between a 1 to 5%, sometimes even upwards of 10% on those crazy 2 to 3% moving days. I mean, you see pretty big swings on these things. And it doesn't, when you look at the chart, you don't think that it's that big of a swing. Like, this was a minus 3.07% day. And when you just look at the chart, because it looks just like the NASDAQ chart, of course, you don't, when you're looking at that chart, you don't think that it's that big of a drop, but it is. So again, if you don't know much about leveraged ETFs, just know the rule of thumb is that they move 3 times whatever the index that you're trading is moving. So the TQQQ follows the NASDAQ. So whatever it moves, like right now, it's up about 0.5%. Thus, why TQQQ is now up about 1.5% in after-hours trading. So say the NASDAQ jumps up 1% tomorrow, this will jump up 3% roughly, just as a rule of thumb. And that's what I love about these. I would never really suggest holding these long term, just because so much can happen with them. Like, to put in perspective, when we look at the NASDAQ daily chart, which you guys definitely need to know this. So the NASDAQ, for example, is only about 300 points off its all-time high. So if we do the percentage, I can't get my thing to go at 94. We'll just do that. Close enough. So to get back to all-time highs, we're talking roughly 4 to 4.5%, where when you go over to TQQQQ, it is still very, very far from all-time highs, because, of course, with leveraged ETFs, you're just because, oh, wow, whatever the NASDAQ moves, I'm going to get 3 times that profit. Well, guess what? You're going to get 3 times the loss as well. Look how big of a drop it had. Now, can you swing trade these things for even a couple weeks at a time? Sure. Me personally, though, I only like holding these things for a couple days here and there. A lot of times, even just overnight, I'll kind of buy either SQQQQ and sell it within a day or two, sometimes a little bit longer. But I do not like to hold these leveraged ETFs too long, just because sometimes things can get out of control. And again, when we're talking about it, you can see to get back to all-time highs here, you're still talking about another 45 to 50% move to the upside needed. So there's a lot that goes on in those leveraged ETFs. If you can buy them at crazy lows like you could have back in February, March, then by all means it wouldn't have been a bad idea to hold them for a month in hindsight, of course. But I like to again, it's just my own personal trading style. I like to just find them, again, when they're short term, kind of oversold, and just collect my usually somewhere around 2 to 10% profit just over and over and over again. That's just, again, me personally. So now we'll go ahead and take a dive into that QQQ option trade that we place. So when we go back and look at it, obviously futures options prices do not update after hours, of course. They only trade during U.S. cash open, which is from 9:30 a.m. Eastern until, what is it in Eastern time? 4 p.m. Eastern time as well in the U.S. So when we look at this trade, you can see here I took a 220 and 223 strike. So pretty much my break even is somewhere around like 220.50. So what does that mean? As long as, and we'll just say 220 just so we're not even like ballparking. We'll just say 220 to be better safe than sorry and just make it simpler for you guys. So pretty much as long as QQQ stays above 220 by the expiration date, I would collect full premium. Again, we don't plan on holding these till expiration, just because why would I want to hold this position for over a month just to collect $80 to $90 of profit? I mean, yeah, it's 30%, but there's a lot of risk, obviously. Like, the position could be up, because if the market goes up, say, or QQQ specifically goes up, say, 5-10% in a week, obviously more than likely it won't happen, but hypothetically, say it goes up 5 to 10% a week, this position could be at like 80%, maybe even 90% of the max profit potential. Why would you not go ahead and just cover that profit? In that case, it'd be somewhere around $70 out of your $84 max potential. Why would you not take that profit off the table versus, well, I'm going to hold out another 3 weeks just to collect full premium, when obviously in a blink of an eye the stock can reverse against you and then you end up going back down. So our goal here is not to have to hold these till expiration, but we tend to go a month out just because the premium is usually a little bit better. Because when you're doing like just straight up weeklies or even stuff that expires in like 2 weeks, there's not enough premium, there's not enough money on the table to make it worthwhile. Now, whenever you're first trying this stuff out, maybe try to do something that's like 2 or 3 weeks out, because whenever you're doing the monthly ones, you do have to put up a little bit more capital. This is wrong, by the way. The buy power effect, everything is showing here is absolutely wrong. So don't even pay attention to that. But like this trade, I know I had to put up somewhere around like, I don't remember, somewhere between $300 and $400. Again, I have that trade posted in our Discord group chat if you want the exact numbers to a T. But if you're trying them out first, obviously paper trade them first and foremost. But if you're going to be using your real money and going to be doing these vertical spreads for one of your first trades with options, I would suggest maybe doing one of those 2 to 3 week out, because even though the premium offered is less, and by premium we mean credit, potential for profits, all that stuff is smaller, the amount of money you're risking smaller at the same time. So say you did this exact trade but did it with a week or 2 less of expiration, your profit is going to be essentially somewhere around ballpark at like 50% less. So you're looking at a max profit of like $42, but you're only risking about like $150 or something, hypothetically. Again, that's not exact, it's just hypothetically, so you guys kind of get what I'm saying. But yeah, I would definitely, what was going into my mind, like when I made this trade, was, again, whenever I look at QQQ and I saw kind of just the same thing, because again, it's going to be pretty much the same exact chart, because TQQQ is going to move 3 times whatever this does, ballpark, right around 3 times. Hence why this was only down just over 1%, while TQQQ was down over 3%. So the charts are literally the same. So whenever I was looking at it, I actually did this position first. I bought TQQ in the after hours trading, but I bought QQQ, the vertical spread, put spread, just before the bell, like 1 or 2 minutes before the closing bell. And again, I just saw the same thing. I was like, you know what? When I look back at it, I can see that our old resistance has kind of become a new support line, and we're right around that 1 hour lower Bollinger Band. And as you can see here, we rode it, and boom, now we're back above it. Now we are probably going to meet some resistance overnight around this. This blue line here is your 20 SMA. It's just the 20 simple moving average or whatever. So good thing is we're above the 8 EMA I see, which I like, but we're probably going to meet some resistance around here overnight. Wouldn't be surprised even if we dip a little bit tonight. just a little bit. I don't mean like go red or anything, but overall though, I expect this thing to go up. And honestly, if this can jump back up to even just like 230, or even if what would be awesome is 231, 232, this position is going to be up pretty nice with that options leverage. I don't know exactly. I don't know like options. There's an option calculator where you can calculate the profit, but off the top of my head, I don't know. My max profit's 84. If it goes up, what would that be from a percentage standpoint? We closed at 22.87. We'll just go with 62. So if we jump up to 231, that'd be a 1% move to the upside. 1%, maybe. Let me see. I'm going to low estimate here. I'm going to try to go on the low side and say this position that's down $4 currently, which is BS. It's not really down $4, but whatever. Down $4 at this moment will probably be up somewhere around $20 to $25 tomorrow. Probably somewhere around 20. Again, I'm trying to low estimate. It might even be up as much as $30. Like I said, you can get a lot of that potential profit, potential max profit within a couple days if the stock starts to move your way immediately. Think of it like when you're buying just simple normal calls and normal puts. Just your profit isn't going to be as enhanced as when you're buying just straight up naked calls and naked puts, because you have that other option that you have the one that you're buying and the one that you're selling. So at the end of the day, one is going to be technically like losing money. Like, so you can see that one there is obviously the put is the one that's going to be losing the money, while or the put that you have bought is the one, right? Yeah, the put that you buy out. Sometimes I get which ones you buy and sell mixed up. The one that you bought is going to be the one losing money, while the one that you sold is the one that's going to be making you the money. So you're kind of, it's almost like you're hedging essentially. So your profits they're going to be capped. Obviously, you have your max profit, but when you're thinking about it again, think of it as when you're just simply buying a call or buying a put. Whenever you buy a call on, say, QQQ, and it goes up 1%, you can have jumps of obviously 20, 30, 50, however much percent based on the expiration date. Same type of process applies to vertical spreads. It's just, again, it's going to be capped a little bit because you have that hedge in there that's capping how much profit you can ultimately get at the end of the day, which is why you have that defined risk. And again, I like defined risk. I don't like, you have a defined risk when you're simply buying a call or buying a put. Your risk is just the entire investment or whatever. But whenever you are just simply putting that vertical spread on, you don't have to have theta, all this other stuff working against you. Actually, theta is working in your favor. That's a different topic for a different day. But I like knowing essentially that, hey, you know what? As long as this stock stays above a certain price and actually moves in my favor just a little bit, I'm going to see some pretty good profit. I don't need it to move like today, right now. Say this thing goes down a little bit tomorrow, I'm still going to be down on the position a little bit. I'd probably be down like $10 or something, depending on how much it would go down. But it wouldn't be like a straight up call or a straight up put where if it goes in the opposite direction, my position's down like 50 to 75% in a day, like something ridiculous like that. So that is what I like the most when it comes to these vertical spread options. So it's been a little bit since we checked our stream quality. It says our stream quality is still good. But yeah, I think that pretty much wraps it up. Like I said, whenever it comes to buying vertical spread options, which I love vertical spread options, they're pretty much the only options I trade anymore. Just because, again, I like that security. I like the defined risk. I like the defined potential for profit and all that stuff. And when it comes to, again, placing that trade, I just take a look at like my indicators overall, mostly based off of the 1 hour chart. The 1 hour chart doesn't tend to fail me too often, especially when it comes to going long. Going short, it can from time to time, but I like to go long more than short personally anyways. When it comes to going short, I like to look more at the 4-hour chart, just because the 4-hour chart tends to be a little bit more accurate when it comes to going short. As you can see here, we hit overbought up here, and then obviously we started to slide. Could we continue to, like I said, could we continue to slide and see this thing slide down to like 225? Potentially, but overall, I'm pretty confident that we're going to see it take another leg up tomorrow. We definitely got enough room. We're not super cool on the RSI, but we definitely got some room to continue to keep going up if it wants to. We've seen it happen quite a bit, actually. So, oh, and then lastly, I don't want to forget that when it comes to like my strike prices that I choose, and I'll probably do a video about like how I pick my strike prices and whatnot coming up very soon for you guys, but just to keep this short and sweet so we don't make the stream too long, when it comes to picking my strikes, like you guys saw, my strike prices were 220 and 223. So one, I like to have the strike prices usually a minimum when I'm doing like SPY or QQQ. Those are the ones that I tend to do the most when it comes to vertical spread options. SPY is the one I primarily play, but from time to time I'll do QQQ as well. But when I'm doing those, I like to generally have a minimum of 2 to 3, but preferably 3 to 5 strikes in between. And what I mean by that is, like, say this strike's 220, I want this usually between 222 to 225. And this one we did 223. And again, that's just where you kind of play with it and see like how much risk you want. And plus, it gives you more wiggle room if you have to start like rolling the trade or anything like that. But again, that's a different topic for a different video. But me personally, the main thing that goes into it is how much do I want to risk, how much profit potential is there, and I just kind of play with the strike prices based on that. And then also, we picked 220 and 223. Why? Because like I said, could we continue to fall a little bit more down to like 225 or maybe even like 224? And briefly, at the absolute worst that I see, 222, 223. Yes, but I think at the max, you're looking at probably 225 to 226 on a continued pullback if this keeps pulling back. So that's pretty much saying that this thing would drop from here. Let's see, 2287 or 22887. So if we can get it up there. So to drop to 225, we're talking about another 1.5 to 1.6% move to the downside to come all the way down to my strike price, like my quote-unquote break even, which is just below 223, would be another 2.5 to 3% move to the downside. So do I see something like that happening within the next, again, since we don't plan on holding these very long, I think in the short term of 1 to 4 days at the max, do I see that happening in the next 1 to 4 trading sessions? No. So that's what I take into account, and then obviously I look at the potential for profit. I like the potential for profit to be usually north of 70%. If I have a 7 out of 10 chance of a trade being profitable, I'll take those odds pretty much every time for sure. So that is what goes into my thought process again when it comes to trading vertical spread options, and we talked about the leveraged ETFs as well. And if you missed that, if you're like, I don't know if we have anybody like joining the stream right now or anything, but if you're going to be tuning in late or if you see the end of this or whatever, we also talked about the leveraged ETFs, how I make my thought process going into those. And then just real quickly, like I said, for those of you that keep up like with my portfolio process, like I said, we're now up over $500 since hopping on TD Ameritrade Thinkorswim. Again, we've been on there now for about 8 weeks now. 505.81, and that's before fees and commissions. After fees and commissions, it's right around 500. But before fees and commissions divided by our investment of $1,500, we're now up about 34%, quote unquote year to date, realistically in the last 8 weeks. So if we divide that out by 8 weeks, that means we're still doing about 4 to 4.25% per week. So That is awesome. I like that. And from a net profit standpoint, again, it's about 497, and it keeps bouncing back and forth, divided by 1,500, which is obviously still going to be about the same, 33 to 34% over the last 8 weeks. So I will definitely take that for sure. Hopefully we can just keep this thing rolling. And again, definitely appreciate you guys tuning in. If you like the stream, if you like the video after you see it whenever it uploads as a video, definitely hit that like button. I greatly appreciate that. Like I said, if you're new to the channel, we'd love to have you here for the future streams. We do one of these videos. This was more of like an informative video. We try to do at least one of these every week. We usually do some sort of stock market update as well, once a week, and then we have our Sunday stock watch, where we just come here every Sunday evening and just take a look at the broader markets and what we're looking at for the next week, and I answer any questions and any stocks that you guys want me to take a look at. So we'd love to have you here for those future streams. Definitely consider hitting that subscribe button below. Hit the bell icon right beside it. That way you'll be notified every time we go live or upload another video. And then lastly, again, like I said, if you're not already in our Discord group chat, we'd love to have you there. Like I said, there's like almost 200 of us in there now. Somewhere around like 170 to 180. So we'd love to add you to that awesome community we got going. But until next time, guys, keep on going out there, making your profits, covering your profits, and achieving your financial freedom this year. And I'll see you guys in the next stream here in a couple days. But until then, take it